Hello, viewers. Today we'll be assessing the financial analysis of Doctors Hospital. It will be presented by Benicia Ferguson, myself, Darren Miller, and Tanya Patty. Just as an overview, Doctors Hospital Health System is a leading private healthcare provider in the Bahamas. Established to deliver high-quality, patient-centered care, Doctors Hospital operates with a mission to enhance health outcomes through advanced medical services, innovative tech, and skilled professionals. In terms of their board of directors, it is currently made up of 9 members, with Mr. Felix Stubbs sitting as the chairman and Mr. Wade Christie sitting as the vice chairman. As it relates to their economic climate, to briefly review, right now the Bahamian GDP rose to 14.1 billion in 2024. As it relates to Doctors Hospital specifically, unpaid bills increased bad debt provision to 12.7 million. Now, there have been improved collections, which saved 3.55 million. And then there's also equity investment of 4.99 million from Health City Keyman.
Okay, industry overview. Let's take a look at the industry overview of Doctors Hospital and how it operates. The Bahamian healthcare system is a mix of public and private models. What's interesting is that while public hospitals like PMH provides broad access, private providers like Doctors Hospital offers high quality services, shorter wait times, and specialized care. There aren't many private hospitals in the Bahamas, which means Doctors Hospital face limited competition, giving it a stronger advantage. However, entering this industry isn't easy. High capital costs, tight regulations, and the need for skilled professionals create a significant barrier to new players. The company's overview. Doctors Hospital System is a headquarters right here in Nassau, Bahamas. It operates in 2 key facilities, Doctors Hospital and the newest Doctors Hospital out west. The main campus provides full acute care services, while Western facility focuses on diagnostic and outpatient care. The company employs over 350 staff members and currently has more than 70 inpatient beds. What's impressive is that they're not just growing in size, they're expanding outpatient services and diagnosis to meet rising demands. The company analysis. Doctors Hospital is more than a hospital. It's a full-service healthcare brand. They've expanded their key specialties like cardiology, oncology, neurology, and they continue to invest in innovation and patient care. Their reputation as a quality healthcare provider is well established, and their partnerships with institutions like Cleveland Clinic strengthens that even more. They're known for being reliable, modern, and community focused, which gives them a unique position in the market. Financial performance 2022-2024. Okay, so now looking at the financials, we see a consistent growth in revenue from 67.6 million to 76.9 million. However, the net income has declined slightly from 13.5 in 2022 to 9.3 million in 2024. The good news is that the shareholders' equity has increased significantly rising to 63.3 million in 2024. Even though there was a drop in some net income due to expansion costs, Doctors Hospital remained financially healthy with stable debt to equity ratio. Sorry. The income statement. Okay, so when we analyze the income statement, we see that Doctors Hospital earnings are still strong. Revenue growth has been supported by outpatient services partnership and better collection of receivables. They've also made substantial investment in infrastructure, technology, and staff development, all while maintaining profitability. Okay, now we're going to discuss the balance sheet. Doctors Hospital balance sheet reflects stability and growth. Their total assets have increased and the equity position is stronger year after year. Despite taking on some short-term liabilities during expansion, the company has maintained healthy capital management. Okay, so we're going to discuss the ratios 2022 through 2024. Okay, so let's break down a few key ratios. The profit margin stands at 12.14%, which is healthy within the industry range. The ROE is 14.76, and the return on asset is 11.8%. Both solid indicators of operational efficiency. These ratios confirm that Doctors Hospital is balancing growth and profitability effectively. Capital structure. Doctors Hospital continues to operate with a conservative capital structure. Its debt to equity ratio is 0.33, much lower than US hospitals like T-TED Health and HCA, which are in the 6 to 11 range. This shows that Doctors Hospital is not overly reliant on debt and maintains a financially cautious approach. That's good news for their investors. Profitability comparison. In terms of profitability, Doctors Hospital holds up well against international competition. Their ROE and ROA are within or above typical industry ranges, and their 12.14% profit margin shows strong financial discipline. This level of performance makes Doctors Hospital a very attractive investment compared to similar size healthcare providers. Capital structure comparison. When we directly compare Doctors Hospital to other hospitals, the difference is clear. For instance, while CHA and TNET have high debt to equity ratios, Doctors Hospital keeps theirs low. They make them less vulnerable to interest rate fluctuations and financial risk. Again, this is a plus for stakeholders. Okay, liquidity comparison. Okay, finally, let's touch on liquidity. Doctors Hospital has a strong liquidity ratio above 1.7 for both current, and quick ratios. This means that the company can clearly cover short-term liabilities, fund operations, and respond to emergencies without relying on external financing. It's a key sign that Doctors Hospital is sound, financially sound, and in financial health, good health.
That is not to say that the hospital is not without their legal issues. Doctors Hospital has faced legal challenges, including patient negligence claims, staff injury complaints, contract disputes, and even miscommunication and safety threats. Just to highlight a few examples, these two cases were instances between Doctors Hospital and former employees. Samantha Colebrook in 2023 suffered spinal injury due to unsafe working conditions and was actually awarded near $49,000. Another instance was Yvonne Wallace in 2021, where she suffered an on-the-job injury and the hospital was at fault due to breach of duty of care. The plaintiff was awarded near $7,000. Ultimately, legal problems are an issue as it relates to the company because it can lead to unplanned expenses and can disrupt the company's cash flow.
The SWOT analysis is as follows. The strengths that are provided are a leading provider, quality service, and expansion ready. The weaknesses are burnout, costly for the uninsured, and high bad debt. The opportunities are outpatient growth, LAMP, new services, the new Blake Road facility and outpatient services expansion, increased demand for private healthcare post-COVID, and strong brand trust and strategic partnerships. The threats include competition, legal risk, and IT system vulnerabilities. The capital structure reflects how Doctors Hospital finances operations and growth. The debt to equity ratio is key in evaluating leverage and financial risk. The following analysis covers 3 years of stable yet strategic capital management. This is the capital structure table. It shows our assets, liabilities, equity, and then the debt to equity ratio for the years 2022, 2023, and 2024. As you can see, the debt to equity ratio remains stable. The trend analysis shows that the debt to equity ratio trend goes from 0.33 to 0.31 back to 0.33. This reflects strategic use of leverage. They maintain a stable equity base of 95 million, and they have a balanced approach to debt and growth. The strategic implications are that they have a strong financial stewardship through stability and discipline. They are risk conscious. They are risk conscious growth in a changing healthcare landscape. They have sustained dividends and investor confidence. And Doctors Hospital capital structure reflects resilience and foresight, along with consistent leverage, which shows prudent management. Finally, they are well positioned for future healthcare expansion. The dividend policy reflects Doctors Hospital's balance between shareholder returns and reinvestment. The focus is that consistent payouts align with profitability and strategic priorities are maintained. We are going to cover years 2022 to 2024. This is a dividend policy table. Over here, you can see the amount per share and the dividends paid out. The trend analysis is that the policy adapted to performance and investment needs is maintained. We have extraordinary payouts from 2022, and then we go to steady dividends from 2023 and 2024. This reflects strong fiscal management and commitment to shareholder value.
Next, we can discuss the intrinsic value. Here, we would have used the discount dividend model Reason being is because the Doctors Hospital pays steady dividends. The DDM also assumes constant growth, making it ideal for mature healthcare providers such as doctors. Not to mention, it provides long-term valuation based on expected future returns to shareholders. So here we see where we would have calculated the projected dividend of 2025 to be 0.0416, and then we also calculated a return for 5.98%. Once we would have broken that all down, we got an intrinsic value of $10.79. Previously, it was assumed that their value would be $10.75, so it is slightly undervalued. But even with a slight undervaluation, this can be meaningful for long-term investors. This actually indicates investor confidence and stable growth. So combined with the hospital's market position, it actually makes it a potentially attractive investment. In conclusion, our dividend discount model analysis indicates that the stock is slightly undervalued, making it a good long-term investment option. With continued innovation, strategic expansion, and a focus on quality care, Doctors Hospital is well positioned for future growth and increased shareholder value. This is definitely something that can be bought. Thank you so much. Have a great day.